Welcome to Shadow of Truth with your host Dave Kranzler and Rory Hall. And today is Tuesday, February the 16th, 2016. And we have the distinct honor and great pleasure of welcoming back to the show Mr. Bill Murphy, the chairman of GATA.org, the Gold Antitrust Action Committee. Bill also publishes the La Metropole Cafe Midas Report. You can find that at lametropolecafe.com.
So now that I think about it, I don't think that LBMA fix got enough attention.
Well, it's just like everything, all the other news cycles. They come, they blow up, and then they fade into the background. I mean, instead of it, having a life of its own, which something of that nature should, it just goes away.
Right.
On
but
to the next.
It is no one, I wrote a blog post about it, but not very many people really came out and called it for what it was. It was wholesale theft of silver on the LBMA.
Well, but was it theft or was it them trying to put out a gigantic fire? Because I think that's what it was. I mean, yeah, there were some people that were mistreated financially, that were on the wrong side of that deal. But the bigger picture of it is that what broke? That's what I want to know. What created it?
I think the fire that it put out is that these bullion banks are short physical silver, and that was an opportunity to grab a lot of it at a very low price. I don't think they were trying to, I think that's the fire that was being put out. I don't think they were worried about the price running up in their face, because obviously the price ran up in their face shortly thereafter. I think they knew the price was going to run up. When they hammered silver back in April, it was the end of April, I think it was 2011.
Yes.
Yeah. Did you know that at the same time when they implemented that operation, there was also about a 200-ton load of gold, of physical gold, that hit the LBMA, and it was speculated at the time that it was the Bank of England that dropped it, because they needed to do something the best way, the most effective way when they manipulate the metals is to drop a load of physical gold on the market, because the market's not going to absorb. The market can absorb paper. It can't. Well, it can absorb paper a lot better than it can actually absorb physical gold hitting the market.
Yes.
Yeah. So it's like, whereas tossing paper out there is like, machine gun strafe. The huge payloads of gold are like B-52 bomber bombings, and they can't do them very often, but they did it then.
That's actually a very good analogy, because that's what it is.
Yeah, exactly. So,
but they don't have that. The opportunity to do that with silver doesn't exist, or does it? I mean, because, and the reason I say that is there isn't that type of physical silver just hanging around, to my knowledge. I mean, there may be, but...
That's right, but this physical silver is not being accumulated institutionally or by central banks the way gold is. I mean, they can supply retail silver right now. They're in trouble if retail demand goes from, less than 1% of the population to like 5%.
Or even 1.5% or 2%. Let's keep it in the realm of reality. I mean, if it goes from where it is currently to 1.5%, which is below 1% right now, well below, I mean, come on, it would choke them out.
Yeah, that's true. That's right.
I mean, it doesn't have to go up 5%. It just has to go up a little bit. It just has to go up, a significant few tenths of a percent.
I wonder what percent really is. 1% of the population would be about 3 million people. Do we not think that there's 3 million people buying silver out there, or who have bought silver?
That's an excellent question. That's monkey mind right there.
Anyway, it's an interesting time, and thanks for getting a hold of me.
Well, we're glad you're here, Bill, because with everything that's going on with the market, starting a couple of weeks ago, things have really been a little bit more exciting. We've had some nice green up days in silver and gold, and looks like we're getting a little pullback going on here. And how do you see, or do you think that these guys are going to be able to contain this up move in silver and gold right now?
That's the big issue. You know, the Gada shtick is that this market's all about the gold cartel, the gold silver price suppression schemes by the billion banks and the government, especially the U.S., the Fed, Treasury, Exchange Stabilization Fund, BIS, blah, blah, blah. And we know what they've done all these years, and they've created incredibly artificially low prices in gold and silver. I mean, mind-boggling. And all of a sudden, since, in January, we've seen this price action, which has been extraordinary. And for gold to do what it did last Thursday, rallying up to 1262 at one point, I mean, it's astounding. And we know that we got to figure, what are they thinking about? Where's the counterattack? What are they going to do? How much trouble are they in? Of course, we got an attack, which happens so often with nobody around, yesterday. And yet, if I might say, let's shut up here, is that gold actually rallied $30 off its low last night. I mean, it's still down from where it was, but I mean, that's extraordinary. That never happens. I mean, never. So anyway, that's where we stand at the moment.
So do you not think that you think that it's out of control, and did that situation with the LBMA, Thursday before last, did that break them? I mean, or are they going to be able to wrestle this thing back to the ground?
These markets have taken off, first of all, since the HUI made a bizarre 7-point or so drop down to 100, or we felt they were trying to go after stops as part of an end game so they could cover, because this thing was getting ready to go. And it was on a particular day. It made no sense. There was nothing else going on, and it failed. And the HUI went from 199 to almost 160 straight up since that time. Was that a fluke? I don't think so. That was followed a week later by the goofy LBMA silver fix, 50 cents or whatever below the market, 13.58, and silver goes then almost straight up to 16. Yet another fluke? These things are one after another, shows what the desperation, I think, or the change in plans that the bad guys have. And they're going to try to disguise it and do whatever they can. But as far as I'm concerned, the big move is on its way. Now, are we going to stumble along the way? Yes. Are they going to continue to attack? Yes. And it'll all be up to the physical markets. If the physical markets are strong enough to counter this, and that will be fed by all this horrible news that's going on all over the world in terms of financial markets and economies, the bad guys are in trouble.
Bill, I agree with that. And actually, that day on the Huey index that you were talking about, the Huey actually traded below 100 intraday.
Yeah.
And I think it actually closed around 102 that day, if memory serves me. And I was looking at that, and it reminded me exactly. I mean, when I saw the Huey go below 100, I'm like, what's going to stop them from taking it to zero? And when I saw the close at 102, I thought back on the day, and I was like, this is the same exact thing went through my mind back in, remember in late October 2008, when they were just pummeling gold and silver. And silver, I believe, went below $8 an ounce intraday. And I was sitting there thinking to myself, what's going to stop JPMorgan from taking silver to zero? Well, silver closed up that day, and that was basically the start of the run that took us into the high at the end of April in 2011. So, in fact, the action in the Huey reminded me exactly of late 2008 when when the system was imploding. And as you point out, that day on the Huey, there were no news reports and no events that would have warranted any kind of sell-off in the miners.
Yeah, I might add, because for your listeners, that the HUI has formed a massive base since August. I mean, massive, and tested that area a number of times. That's why I mentioned that we felt, and I know Mike Ballinger felt the same way, that they were going to go after stops, and it failed. And as you say, they closed at 102 or so, and then it's gone straight up. And if I'm correct, the bad guys, as I call them, know that they're looking for an end game. It seemed to me it started in October when they started to go bananas on a daily basis to hit gold. I mean, they were frantic. Silver went down 15 days in a row back then. And it was like, this is just over the top after watching this stuff for 16, 17 years. This was the most tense on an every single day basis. And sure enough, so far, that's the way it's playing out. That they know that they have an end game coming, and it's begun. And those two events were signatures of that.
So I think I wanted to just chat about that LBMA fix just real quickly one more time. I mean, you mentioned it briefly, and I actually looked at that and I thought that it was a final capitulation, and I looked at it as these corrupt bullion banks using that as a last gasp opportunity to make a physical silver grab on the LBMA at as low a price as possible. I mean, the price of silver, it was at it was trading, well above $14 an ounce, and then for a nanosecond it was at $13.58 or whatever the price was where they fixed it, and then it literally snapped right back. It was as if they took that fix down, and the only purpose of it was to clear all the silver that was for sale on the LBMA that day at $13.58 instead of at a 14 handle. And I thought it reflected this idea that I think is happening, is that there's a massive paper short in silver, and these guys are in trouble. And that was one of their last opportunities to try and sort of reduce or minimize the consequences for being as short as they are.
I couldn't agree more, and you said it, so well.
So, and I'm wondering, because you, in last night's Midas Report, which for the benefit of the listeners who aren't aware of this, you put out a nightly, we call it affectionately the Midas Report, but it's essentially a recap of the day's activities in the precious metals market, and sort of shed light on the truth of what happened and why with a lot of other contributors. And they can get that at lemetropolcafe.com and sign up for it there. And I personally think if you're involved in precious metals, you can't do it the right way without subscribing to the Midas Report. But you talked last night about the idea of a commercial signal failure, and could you just talk about that a little bit for our listeners?
Sure, be happy to. It's really pretty simple. The way the precious metals have traded all these years, and I started in silver, I think 74, 75, for good grief, way back then, is that when the market goes up, the specs get long and the commercials sell. It's the way it is, and it goes on and on and on. The more the price goes up and the moving averages turn positive, the more the spec sells and the commercials sell, which includes the gold cartel, that nefarious group I mentioned earlier. Well, every time they usually get shorter and shorter, and the specs get long, and normally, even in the bull market that we had, they'll turn the specs, they'll let the specs get long, then they go after them. By their selling, they force the specs out, and eventually a lot of times the specs actually get short, or a few times they'll get short, and then the process starts over again. So even in a bull market, they pick off X number of cents each time in gold and silver. And this is going to happen forever until something changes in the physical market or in the markets in general, in which these commercials and gold, especially the commercial more than the gold cartel, because they may stay in there because of the government, where the market starts to go up, instead of correcting, the physical market's strong enough, it keeps going, and then it keeps going. And at that time, the losses are too painful for these so-called commercials to stay in there. They're forced to cover. And that covering is what's called a commercial signal failure, which differs from the way gold and silver trade all the time. And this will be especially true in silver, which is ludicrous where the price is, and it's just going to go bonkers. So we keep looking for that. Now, you had the beginning of that with a spike of silver up to 16 recently, and gold at 1262, and then they've attacked. That doesn't mean we still can't get one just because they've attacked. If silver, instead of correcting like it normally does, eventually, next week or so, or breaks through 16, it can still lead to this, what I call a commercial signal failure. And in my opinion, we will never, never get a big move without one, because the commercials will keep doing the same rope-a-dope knock out the specs all the time. And you're not going to get the specs to sell as the market goes up. It just doesn't work that way. And so that's my own opinion anyway. So that's what I keep looking for. And we won't know till after the fact if we're going to get one. But all of a sudden, if gold, silver's up 250 in a day, and all of a sudden you see the open interest go down, well, that'll be an indication we've had a commercial signal failure.
But can't the cartel, the bullion banks, can't they just go in and put as many paper contracts as they wish? I mean, there's obviously nothing that backs all of that nonsense. So why wouldn't they be able to just continually do that until the end of time?
Because it's real simple. When the rubber hits the road? I mean, it has to do with the physical market. All of a sudden, if it's not there and you're scrambling for supplies and you cannot deliver into the paper market, that's what will happen. It can't go on infinitum. Somehow, some way, and I don't know, the big experts like in silver, Eric Sprott, David Morgan, they can't figure out where this silver has come from to get the price down here. I have my own thoughts, but I have no idea if they're correct. But if we're right, and it's so oversold, they're going to hit this wall, and it's going to be unbelievable when silver makes this move higher because of what they've done. Because as you're talking about, it's not there. And for me, the key will be 1850. If it ever takes out that level, it's gonzo time. And that's what they've been trying to protect. That's why the silver action has been so horrible, especially last year, the end of last year. I called it has like an anchor around it. It had a magnet towards 14 for a while. Well, we've seen some really different action and suggesting that they're beginning to lose this control, and they're still going to try to keep it. But the physical market seizes up on them, and everybody wants it, and it's not there. They'll be forced to cover. It's not because they want to. They'll be forced to cover, and that's what's coming. I'm hoping we're here.
Me too.
Bill, it amazes me that after all these years, I mean, you mentioned that, these high profile guys are out here scratching their head on where the silver's coming from. Well, it's pretty obvious to me it's coming from the SLV Trust. I mean, I just pulled it up a minute ago, and they're reporting on the iShares Silver Trust page that they have 312 million ounces of silver in there. Well, has anyone ever gone to actually verify that? No. There's no accountability, and there's no requirement for any kind of independent accountability on the GLD and SLV Trust. The prospectuses were designed that way by design. It was done intentionally by design. And I remember back in 2004 when they rolled out GLD, and then they rolled out SLV just after that. And our whole community was like, oh, well, it's obvious what they're doing here. They're creating these trusts to divert all this institutional money that was moving into gold and silver at the time. Remember that?
Absolutely, and it's
right. And so they were creating these trusts to use those as their safety net because they knew that at some point they were going to run out of gold and silver on a mining production basis to feed all the ducks that were starting to buy gold and silver. So in my opinion, I think all this silver that we're seeing that gets distributed by the mints right now, because as I mentioned to Rory earlier, you don't have big institutions and central banks buying silver. You just have the public, and it's a very small percentage of people out there actually buying it. So for the time being, the SLV Trust can serve that purpose. But I would bet my last nickel that 312 million ounces that they're reporting is not really there.
That wouldn't surprise me. It's no coincidence. And that's what I was jumping up and down about when I testified on behalf of God in front of the CFTC a number of years ago, that the custodian of the silver ETF is JPMorgan. Geez, the big short. And then, back then, HSBC was the big gold short, and they're the custodian of GLD. I mean, it just fits right into what you're talking about, and they've been part of the gold cartel, and so this figures that this would be part of their operation.
That's right, and originally in the SLV prospectus, they were only allowed to keep the silver at JPMorgan vaults in London. Well, then I don't remember exactly when that changed. It was either 2010 or 2012. All of a sudden, out of nowhere, the COMEX became an approved vaulting facility for the SLV silver. Isn't that convenient?
Yeah, well, this is the way they do things. I mean, change the rules, bend the rules, make the rules. That's them.
Do you see, will they be able to do that in light of China and Russia's voracious appetite for gold and silver? Do you think that they will be able to change the rules midstream the way they have in the past?
Well, again, it's the physical market that's going to be the name of the game. I mean, they've been able to get away with this because they've been using central bank supplies, and the demand numbers have always been underreported. And Dave's talking about they moved the silver around. They're going to hit the wall, and the question is, are we at that what I call a tipping point, when it does all the things they used to do not working, and we'll see them do the same things that they usually do. It doesn't work, and it will have to do with the physical market where it's like a gulp, where they've hit the wall. And again, you never know till after the fact. But this year has been so different, and we've seen signs of it. And we go back to those two clues about the HUI and the silver fix, blah, blah, blah. It suggests that we're getting here, and that getting here is a process. It doesn't have to happen overnight. These guys are big and powerful, and they will go to the very end to maintain this fraud. But my guess is the end game is upon us, and it's a process that's working out right now. And if that's the case, once the gold and silver and the shares really break loose, it's going to be mind-boggling what they do on the upside, and the volatility of it all will be breathtaking.
Bill, do you think, I've got a chart here I'm looking at, it's actually the price of SLV, but it's basically mirrors the futures price of silver. So back in 2010, in August 2010, from then to April 2011, silver essentially nearly tripled in value in price over an 8-month period. And if you look at the graph, it basically goes straight up. Do you think that what we saw back then was the start of a commercial signal failure, that they, at the time, had enough physical metal available to contain it?
Well, I'm glad you brought that up, because that's the kind of move that, in my own opinion, I see coming again when we take out 1850. Except this time, you've had two runs to 50. Boy, what a time between the first one and the last one. It's going to take out 50 and go to Eric Sprott's number of $100 plus, because since then they've gone through all that physical supply, and there's different ways that we think we know what they did back then. I have my theory and how they got it back down, but of what went on. But this time they won't be able to go to the well. And when you take out $50 this time, it won't be very long till it's 75 on its way to 100. There'll be hysteria. And that's not being overly dramatic. As you just said, what the heck? A number of years ago, in 2011, we've already gone to 50. And it went straight up, And now that all that extra silver is gone that they used up to get it back down, why can't the action be twice as volatile?
And there isn't any physical silver, and the reason that I can say that with such conviction is that Dave and I have had a multitude of conversations with Jeff Brown, who lives in Beijing, China, and the solar program that China has, in conjunction with the solar program that India has, is removing silver to the point of China is actually importing the silver doré. Isn't that how it's pronounced, Dave? Silver
Yes.
Doré. It's the silver ore, where they're actually refining it themselves in order to be able to use it in their solar program. So, I'm going to ask you, Bill. You alluded to it a moment ago that you may have a theory or some ideas on it, but where is the silver coming from? I don't believe that it's coming from the SLV or any of these types of situations. I don't think it exists. Where do you think it's coming from?
Okay, I try to make this short as possible. Here's my theory. Heck, I heard that that JPMorgan back in the beginning of 2011 was forced to withdraw for whatever reason. I heard this from an incredible source, and from engaging in the market, whatever they were having a difficulties or authorities or something that they stopped selling. And so the market went up, and I think, what they were doing is they were buying all the physical silver all the way up. So you'd think, well, that's not a good trade if you're buying silver at 20, 21, it's going to 50. But they kept buying and buying. Then on the way up, they're allowed to come back into the market, and they went heavily short by, pick a number, 2 to 5, 6, 7 times more than the physicals they brought up. So they had the supply, and then when they were ready to bomb, then they had the physical to bomb the market with, and they're short much more than that in the derivatives market. And that's what's been going on, at least to some degree, to batter the market. But now they've run through all of that supply, and they're hitting the wall. They can't play that game anymore if this is correct. So they're desperately trying to keep it down here. Part of it in cahoots, JPM's the Fed's, JPMorgan's the Fed's bank, is part of what they're doing to try to keep gold and silver under control. But they're getting overpowered by what you're talking about, Rory, about this demand coming from overseas and India and China and other places and so on. And they got all this terrible economic news all over the place. And they're talking about, more QE once again, even after all this time. And so the scenario for gold and silver to go bonkers is here. And there's still not many people in the mainstream world that are talking that way. And you know better than I mean, good old Goldman has to come out again when no one's around and talk about $1,000 gold again. And, I think they're desperate. I really do.
Yes, they are. And I want to ask you something. Last time that you were on Shadow of Truth with us, Bill, you had made mention of a contact that you have in London, I believe, or somewhere in Europe, and that person had said that they had on good authority that physical silver was actually going to disappear from the market beginning somewhere around October, November of 2015. Has that played out? Has this contact given you more information regarding that, or are you at liberty to discuss that at all?
Yeah, he's actually going to get back to me. But what is interesting is when the market was moving up to 50, the reports, every one I got, was about how tightness, supply tight. It was unbelievable. And of course, the market was flying. And of course, if I'm correct, that was JPMorgan buying it all up. That's the reason the market was so tight. In other words, to bomb the market. Well, as of the end of last year, even, we weren't hearing any of these reports about physical being tight outside of the retail market going nuts. Was Dave said that's a small part in terms of the big picture. But again, it's a process. And all of a sudden, it can go to that whether it didn't happen in October and November, but it's maybe going to happen between January and April of this year or something, where all of a sudden you see the price trade like it hasn't. And that gold move up on not silver, but on Thursday, we haven't seen a move like that in years. And it has to have them gulping. And going back to silver, I think that's what's coming in the near future. May not be this week, next week, but it's coming, and the process is underway again. And once we take out 1850, I think you'll get the kind of action you got in 2011 on the upside.
But I got to tell you, Bill, I really think I can't explain that LBMA fix any other way than it was their last gasp, desperate grab for silver.
I think you're right on the money, and I mean that absolutely.
Was it then? I think that it was that some kind of situation broke, and they were trying to get a handle on it. Either a derivatives busted or something like that. Or does that play into it? What you guys are saying?
Well, I think. Oh, go ahead, Bill.
No, go ahead. You go ahead, Dave.
I think it definitely plays into it. I think what busted is that they're running out of physical.
Well, we know they're running out of physical. Because the largest silver producing countries are all down. Peru is the only, according to Steve St. Angelo over at the SRS Rocco report. everybody's down with the exception of Peru. I mean, Mexico's down, Canada's down, all of the big, Australia's down. I think Australia's down the most. I mean, they're just, their production is just off.
You couldn't have a better setup, and it's all there. I just want to see it happen. I'm tired of going, here's what's going on, here's what's coming, blah, 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 blah. I mean, I want to say, yeah, baby, we're here. Party time.
Welcome to the party.
Yeah.
Oh, but don't you think that that's going to be kind of ugly all at the same time? I mean, that
Can't
things
do
are,
anything about it. We've tried to warn people, and it's not that I could care less. Nobody wants to see anybody else get hurt, but we've done all we can. And my thing is, the sooner it happens, the less bad it will be. If they hadn't done this gold price thing, it wouldn't be as bad as it's going to be. The sooner it blows up, the less bad it will be. So I look at it that way. The sooner the better, because if it keeps going on like this, it's going to be that much worse.
well, that's true.
You guys are getting what you deserve, because we told you, we put all the evidence in front of your nose, and you ridiculed it and you ignored it. Like you thought the government was on your side and they had your back. Well, guess what? You were wrong. Too bad.
Well, I can understand that. That's why I said I couch my words more delicately.
Yeah, well, you're a more public figure than I am, so you have to be
No,
diplomatic.
it just, I just want to win the day and sail off into the sunset and not be, I've had enough trouble with things, over the past. I just want to, get the job done and have some fun.
I agree.
Exactly.
Well, hopefully the next time you guys have time to give me a shout out here in Dallas that, some of this has occurred and we can go, oh yeah, baby, we're there.
Let's head to the beach.
Yeah. I'm tired of getting this. I'm getting too old to do this day in, day out everywhere without doing some happy dances here.
Well, we've been speaking with Mr. Bill Murphy, who is the publisher of LaMetropoleCafe.com, and that's a subscription service. And he also offers a 2-week free trial. So you just go to LaMetropoleCafe.com, and he's also the chairman of GATA.org, and that's the Gold Antitrust Action Committee. And Bill, we certainly appreciate all your time. Is there anything you would like to leave the audience with?
Yeah, you guys do a great job, and it's been so much fun talking to you. And as I mentioned, can't wait to do it in even a more celebratory situation. So let's hope we get there soon.
I'm standing by my call that I think silver is the trade of the decade. I especially at these prices. And when you look at that graph of what silver did in 2008, and to think that we've had almost 8 years now of more global accumulation and removal of physical gold and silver from the market, again, Bill, just to kind of circle back to the comments at the beginning of the show, I think these guys are at the end of their rope in terms of their ability to access physical that they can use to back the paper that they're using to manipulate the market.
I couldn't agree with you more. 100%.
So I do think, the next time we have you on here, and I'm guessing probably, let's see, what is this, February?
Yeah.
So probably not too long after the end of the first quarter, I think we're going to be looking at much higher prices for gold and silver, especially since people forget about this, but going into the spring, we're going to enter another very aggressive physical gold buying period for the Indians.
Sounds good to me.
Well, we'll get you on somewhere around the end of March, beginning of April, Bill, for that happy dance.
Yeah, and if for some reason we're wrong and I don't answer the phone.
Oh, then you can look at this as an outlet to bitch. A bitch and vent.
Exactly. Well, all right, gentlemen. Everybody
Thanks, Ken. Have a good one.
You too. Thank you, Bill.
Thanks, Bill. That was good.
Bye-bye.